Cool. All right. Well, thank you so much. As Jeanette said, if she ever asks that question, all you got to do to say is roll Tigers, and it'll make her day. Trust me on that. So my name is Ron Haydt. I am from Financial. I am back. I just did a couple events with TradeThirsty, and they were a massive hit. So this is the final version. I am going to send you guys home, just like Jeanette said, with some trade ideas for Monday. And I love Micah's presentation. And what we're gonna talk about is proven track records. And I think you're really gonna love it as well. Now, before I go any further, I always have to show this presentation slide, that everything in this presentation is for educational purposes only. Not advice to buy or sell. I'm not a licensed financial advisor. Can't tell you what to do. And it's always in a paper trading account. I don't like government, so you know what? I'm not going to be licensed. It's just that simple. But we are going to have.
Hey, Ron.
Yes.
Extend your screen out a little bit because I'm seeing like you're drag it out a little bit. Make it bigger.
A little bigger.
Keep going. Like you got a bunch of blue and left. You might need to reshare and make sure you only grab that window because it looks like for a minute there it was picking up something behind you. I got some blue to the left.
Well, I'm leaving that open so I can see the questions if that's okay.
Okay, that's cool. That's fine. Okay, I got you. No worries. Okay.
Is that a little better?
Yeah, that's good.
Okay, sweet.
Okay.
We'll do that. Yeah, thanks, Jeanette. So we got the disclaimer out of the way, right? We know trading is risky. So now the government's happy. Now, here's what we're going to do. You guys are welcome to ask questions as we go through the presentation. I can see the question box and I can answer them as we go. So please feel free to do so. Let me just slide this over a little bit. There we go. And I'm going to be able to take your questions again at the end. Now, the screen will not be maximized. It will be about 90% maximized. So you should still be able to see the screen quite well. Now, in the emails that Jeanette, Hubert, and the gang were sending out, they said I was going to show you the hottest stocks for year end. That's not exactly true. We're going to do the new year too. This is something we did not do last week. So if you were here with me last week, when we did the Encore event, this is going to be a little extra, so consider it a double bonus. Within about 30 seconds, I'm going to show you the hottest stocks for the weeks ahead, not based on theory, not based on anything else, based on the facts, Jack. So you ready? Let's do it. We're going to go to Financial. We are going to type in any stock symbol to get on inside. It's just type in the spiders, SPY. At this point, we are now 2 clicks away from seeing the hottest stocks. We're going to simply click on screen. We're going to click on seasonality. And then we're just going to scroll down. And the stocks that you now see on your screen are the hottest proven stocks for year end with a big old fat period on the end. Maybe even an exclamation point. Now at this stage, there might be a couple questions popping into your mind. One, how do we know that, is this real, etc.? So 2 things. The first, I'm going to get my little pencil out here inside GoToWebinar. I want to highlight the first 5 rows. You guys see that? It says stock price increase, annualized probability of increase. If you are an engineer, scientist, someone who just likes the facts, maybe you're a Virgo, it's data. All we've done is spend a boatload of money and time, which is incredible, on compiling all this data. There is no human element into what you're seeing right now in those 5 columns. For whatever reason, you may have your own personal thought of, hey, maybe it was an upgrade cycle, maybe it's a new product cycle, maybe it's the holidays, right? We just got through Thanksgiving. Hope you guys had a wonderful Thanksgiving. And now we're going to be coming into Hanukkah, Christmas, Kwanzaa, the New Year, right? More holidays on tap. It doesn't matter what the reason is. This is what happens. And this can only happen historically if 2 words, big, I'm having to use a mouse. So if it looks a little bit like chicken scratch, I'm sorry, but it's big money. That's the only way what you see on your screen can possibly happen. Now, I'm going to assume that all of us here today, why we might be trading what we think is a lot of money, generally speaking, when we compare it to what's out there in the broad market, we're considered, guppies in the ocean, a goldfish in the ocean, We're not big enough. And even if we collectively decided that we wanted to go out today and let's just say buy 100 shares of Trex or 100 shares of Tech or ERJ or whatever it might be, we might make one block trade on the CNBS ticker, and then we're done. So for these patterns to keep happening, for example, how about AAW going up 86.67% of the time by almost 10%, and we're talking in 5 weeks. That's what the scan was. In just 5 weeks, this stock historically, almost 9 out of 10 years, goes up by 10% in 5 weeks. That's 2% a week. That's incredible. And if you start thinking about options, a double-digit stock move can translate into potentially triple-digit option moves. And that's where it gets really exciting. So to recap, what you're seeing on your screen right now, 5 columns, it's just data. We've done nothing special, no secret sauce. We're just crunching it within 2 clicks to show you. And why does this happen? Because big money does it. Now, they may not want everybody to know this, and I can tell you for a fact they don't. One of our partners worked at a hedge fund. The hedge fund was so huge. I'm not saying this to impress you. I'm just saying we had to sign an NDA. I can't even tell my wife where my business partner was working, because if we told you the name, you would instantly know it. They are 100% aware of what I'm showing you. What they don't want the world to know is, yeah, they actually caused this, and there's a way to piggyback. To not only piggyback, but identify, see when they come in, follow them, and then also leave. Because here is where you and I, if we consider ourselves retail traders, have a very distinct advantage. Because we're trading small size as compared to the broad market, we can be very surgical. We can come in without being, quote, noticed, and we don't move the market, and we can leave without moving the market. These big fish, the big money, well, guess what? When they come in, they have to layer their position over days and weeks. And now what you see on your screen starts to make a little bit more sense maybe. It's like, oh, so if they have to come in over days and weeks, and they then ride that pony for 1 month, 2 months, 3 months, and then they decide to sell, they create the ebb and the flow. Because if the big money tried to get in all today on one of these stocks, or first thing on Monday, they would cause the stock to spike. And then they're literally bidding against themselves. And the same thing happens when they exit. If they hit the sell button at the same time, they're going to get a lower price back in return. And that's not beneficial to them. They get in over days and weeks. I'll show you how to spot it. They get out over days and weeks. Show you how to spot it. And this is going to be incredible. When I start showing you past performers, this always happens because I get the emails, which I love. And they say, I can't believe it was this simple. Oh my God. You can see them coming. You can see the elephants coming in to feed. You can see the cows coming home. Whatever analogy you want to use, it's just mind-blowing that these things seemingly happen year after year. Now, I have to say one thing. Past performance is no guarantee of future performance. I can never guarantee a thing, and nobody should, right? But this is the question I usually lead out with when I do these webinars. What is the #1 challenge that we face as traders walking into every single trading day? And I think having the webinar on Black Friday, right after Thanksgiving, it's pretty spot on, because we may not have had a whole lot of time yesterday because we were stuffing our face and visiting relatives, hopefully ones we wanted to see, right? Then there's the weekend, and you have a choice. You want to sleep in? Do you want to get up early? Do you want to go play golf? I guess if you're further south in the country. Or do you want to go skiing if you're out in Denver where they're getting pounded with snow? Whatever it is, you might want to do stuff with your families. But instead, we're traders. We're trying to do better for our families. So we're going to stay home. We're going to hunker down, spend more money, buy some stuff, try to figure out who has the best chance of going higher walking into Monday, right? It's what we want to do, and we probably enjoy doing it. We like the stock market. But at the end of the day, what is it? It's a 50-50 coin flip as to potentially which way your stock might move. Well, what if I could tell you that it doesn't need to be a coin flip? What if you're looking at on your screen right now is what the big money does? I'm not telling you the big money does this. These stocks on your screen, they're whispering sweet nothings in your ear saying, hey, look at me. This is what I do. And the only way I can do this is if the big money's pushing, if the big money's contributing. End of story. I think this is a way better route to find trade ideas than trying to guess. We don't have to guess. We know what they're doing. Why are they doing it? Doesn't matter. It's what they're doing. Now, here's where it gets, I think, even more cool. I'm going to go in here, erase all these drawings. I want to get a different pen color too. Let's do green. Now let's do blue. Blue's my favorite color. Financial's sort of blue too, isn't it? All right. Now there is one other column over here, and it's called stock score. So I'm just going to draw a line right here. Over here, this was data, right? DATA, nothing special. We just crunch the data and serve it up on a silver platter. But over on the right, this is the one piece that is proprietary to us. We take into account F, which stands for fundamentals. Now I'm talking about balance sheet and earnings report type information. We can put a C in, or even a T, for charts or technical analysis. We're going to incorporate where is the stock in relationship to moving averages, etc. We're then going to take into account S, which is sentiment around your stock. And the fourth piece of the puzzle, I'm going to make it a big S. That's the seasonality. Just the data. We're going to take all four and give it a buy or a sell rating based on our proprietary mix. Again, left side, just data. You can say, you know what? I like algorithms, but I don't want anybody's opinion in my ear. Just show me the facts, Jack. You're looking at it. Right side, stock score rating. I would encourage you to consider this. Why not take the left side, which is just data, yay, and then add in this extra info? Because it's fundamental, it's the charts, it's saying, hey, the stock is actually looking pretty good from a technical perspective. You have sentiment going for you, and you have seasonality. And if we can spit out a buy rating, to me, that just adds more confidence to hopefully that trade working out. Does that make sense? Now, what you also might notice is there's a couple cells in here. What does that mean? Well, guess what? Even though these stocks on the left side have proven track records, some of these stocks are publicly traded 10, 20, 30, 40 years. But right now, today, you take these four metrics up top, there's an issue. Something's wrong. Maybe the fundamentals this year aren't so good. So you might say, well, is there a way that we can cull the herd? Can you just show me the best of the best? So show me all the stocks that are seasonally bullish, but can you also remove the weak links, the weakest of the group? What we're going to do is see this advanced filtering, hit that tab, take stock rating to both, go back up, and I've removed all the cells. So not only can you come in here and look for just seasonally strong stocks, I can eliminate all the weak links. And what does that mean? Stocks that the fundamentals aren't stacking up, they might be deteriorating, the chart might be deteriorating, and maybe this is the year they don't work. And now we're looking at, again, the shiniest apples in the grocery store. This is where we want to start looking. And I think that's incredibly valuable, so we're not wasting time on stuff that may not be looking so rosy this time of year. Now I have a question. I can't believe how many of you guys are still here. This is frankly amazing. It's awesome. Jeanette and Hubert can bring this many folks together. How many of you saw my presentation with TradeThirsty back in May and June? It was the first time I ever came in. Were you here for that? And if you were, just go ahead and type in yes, because I'll just say your first name. So Sophie said yes, Jerry said yes, Lauren said yes, a couple of you guys. Daniel says no, so this might be Daniel's first time. That's awesome. So for the folks that are willing to type in, so Sophie, Jerry, David, and Lawrence, and others, do you remember the one stock I said to watch for at the end of October and the beginning of November? That one stock. And it rhymes with Mouse House, Disney. So Disney was on this list. Pod was on this list, Insulet. And all we do is we take the stock, we can come up here and hit search, we can click seasonality. We can come in here. We can type in the stock. Let's say it was Disney. Just pick any stock. We go to the screen, and now I can show you the left side of the chart, which is the historical price, the right side of the chart, which is the probabilistic future price. The probabilistic future price of any stock you want to type in, whether the ones that are poised to soar over the next 5 weeks or whenever, you type your stock in, move your mouse, you can see exactly what this stock historically does over the coming weeks. And please keep in mind, there is no human element in here. All we've done is calculate data. This is the stock. I like to use funny, comments and innuendos just to keep it a little more lively, I guess. And I'm a goofy guy, but just imagine the stock sitting on your ear, sitting on your shoulder, whispering into your ear, saying, hey, I know you're looking at all those other stocks, but don't you want to look at me? Don't you want to say, check me out? Because over the next 11 weeks, Disney goes up 78% of the time by 9.5%. And actually over 12 weeks goes up 82% of the time. Over 13 weeks, it was 82% of the time. And we can just keep moving and moving and moving. And then we get all the way out to May, right where the peak typically is. 80% of the time it goes higher. And these are incredible numbers. 17%, 15%, 14%, 10%. This one's almost 1% a week. Guys, some of the ones we're going to look at are going to be a mind-boggling 2+% a week. And they do this with such track records that just blows your mind. Like, how can Netflix seemingly always go up? How can Xilinx seemingly always go up? And what you're going to see is they're going to go up in these periods of time, and they're literally going to fall flat on their face the moment the big money leaves. Now, I'm not talking about Warren Buffett style investing here. Buffett might buy a stock and then hold it for 10 or 20 years, or they put it in the will like a parrot, and it's going to outlive them. This is being very surgical in our approach to applying capital and moving in and out over the course of maybe a couple weeks or a couple months. And we just keep shifting to here, to there, to here, to there, wherever the big money is going. And we know where they go because we have access to the data, and the data sets us free. We're not guessing at who might likely rise. That's why in those emails they sent out, I can confidently say, I will show you who's set to soar. Period. There's no ifs, ands, or buts, or guesses, because it's the stocks that are telling us. You don't even need me. You just need the software. You can say, hey, Ron, if you get run over by a reindeer this winter, I guess as long as the data is paid for, you're good. I'm like, yep, you're good. As long as we're paying our bill, you're fine, because that's all it is. And it's pretty empowering. Jake, you have a question. Can you look for bearish stocks as well? Yes, we can. And I can actually show you that in a little bit. And in terms of futures and Forex, no. However, as long as there's a corresponding ETF, like the spiders, you better believe it. Let's do this example right now, actually. Let me type in SPY, because the S&P 500 is the broad market, and how it's viewed is this. Now, this isn't an exact science for this next statement, but it's an approximation that folks use in the marketplace. That the S&P is the broad market ETF, and if the S&P finishes higher, in theory, 80% of the stocks in the US market will also move higher. That sort of makes sense? And if the S&P or the spiders closes down on the day, pretty much 80% are down on the day. It's good enough for horseshoes, a game of horseshoes. If I show you the S&P, and we are in one of the best times of the year for another 2 weeks, and then it re-energizes in January, check this out. If I take you out over the next 2 weeks, 57% of the time, the S&P goes higher till December 11th by almost 1%. Ooh, 0.5% a week. That's actually not that bad. If I take you out to January 8th, that's 6 weeks. Oh, holy mackerel. It goes higher by a whole whopping 1.6%. And then if I start taking you out into March, look how these numbers get bigger. 76% of the time the S&P goes higher into March. Yeah, that sounds right. That sounds great. 76%. That's better than 50-50 by only 3%. 3% over 6 weeks. Not very attractive to me. And we can go further. We can go out 26 weeks, half a year, and goes up by 5%. Or we can go screen, seasonality, and we can come in here and look out 4 weeks and see who the best performers are. 3 weeks, we can go out 6 weeks. We can go out 7, 8 weeks. We can go out 13 weeks, and here's your bonus. These are the hottest stocks even as we kick off January. And some of the stocks that are on here, Netflix is one of the most repeat offenders out there, and it's a beautiful thing. We love repeat offenders. It's like, just keep doing it. Don't stop. And then we just ride the pony, and I'll show you how to do that. So what I said to you guys a couple minutes ago was, hey, as we look at these stocks that are set to soar, and keep, by the way, look at this. Here's OTEX. 91% of the time that little turkey runs higher. Here's Cognizant. 90% of the time it runs higher. This is over 13 weeks. You start looking at some of these percent increases, that's 18% in 13 weeks. OTEX is 26% in 13 weeks. Netflix is 30% in 13 weeks. Now we're starting to get to that 3% window. As a stock trader, holy moly, options floored. We're talking triple digit potential returns, and not just 100% ROI. I'm talking about 2, 3, 4, 500%. And that's what I can show you from history. It's just mind boggling. And by the way, I always forget to mention this, and I'm not going to do it now because I remembered. Does anybody here do credit spreads? This is an advanced application of trading options. Many of you might say no. Usually it's about a third of the group that does credit spreads. What you're looking at so far in this presentation, so Val and Arthur and Daniel and Jack, when I was looking out 4 weeks and 5 weeks, and now looking out 13 weeks, Elton, you do both? Oh, hey, Elton, how's it going? You guys know that by definition, a credit spread can win in multiple directions. Can you imagine taking seasonality, the power of seasonality, the power of our algorithm for stock score, rating it a buy, and then pairing it with a stock trading strategy, options trading strategy that can win in 4 or 5 directions? It's like a match made in trading heaven. Seriously, it does. How much better could it even possibly get, right? And that's what's astonishing. So if you're more an advanced trader, I always forget to mention that. Now you know, like, oh dear Lord, is this crazy good? Okay, now let's have some fun with some examples. And as Jeanette said, I'm going to send you home with some examples. You'll be prepared to watch. And for those of you that saw me in May and June, 6 months ago, I told you, I pounded my fist on the table. If Jeanette still has the recording, she'll know. I said, please, 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 please watch Disney. Nothing ever works 100% of the time, but oh my goodness, as we approach that November's earnings report, grab the popcorn, sit back, and just wait to see if they do it again. Disney was on this list. If I take you back to Disney, if we go search, we go seasonality, remember, you can type in all your stocks, any of the stocks in here in the US market. And if you're in Canada, we have a lot of folks from Canada, we have Canadian data too. So you can get access to that as well. When you highlight the flag, that's how you can see Canadian stocks. So I keep it off because I'm in the US, so I'm not going to trade Canadian stocks. So here's Disney. I've already shown you how this stock trades throughout the year. You know, till February, 82% of the time it goes higher. But you want to have a fun challenge this weekend with your families or your friends? Ask them when the best time to trade Disney is of the entire year. And they're probably going to say what? Because what would you think? Now, I've already shown you the chart. I just do these presentations by the seat of my pants. I like to keep them live and different. But I should have said to you, hey, everybody, when's the best time to own Disney? And most folks, majority say the summer. It just makes common sense. It seems logical. Hey, thanks, Scott. Scott says summer too. I'm with you, man. Same thing, Jim. That's what I thought before we built Financial. I mean, the theme parks, they're insane. The pricing's insane. The food's insane. The lines are insane. It's an insane asylum. But that's not what happens. Look at this chart. Look how the stock floats higher, peaks at the end of May, and then it drifts lower. If you don't know how long Disney's been publicly traded, scroll down the screen. Over 46 years of data. This stock is as old as me. I'm like 46 and a third, but it's as old as me. There's Republican presidents, Democratic presidents. There's been wars. There's been economic crashes. The stock market has crashed. We've had a housing crisis. We've had debt ceiling issues, which we don't really hear about now because they just keep rubber stamping everything. Someday we'll have to pay that bill. But my point is this, right? There's a lot of stuff that goes on over 4 decades. Yet this is what the big money does. The only way this happens on your screen, gang, is if the big money's doing it. And it's exactly opposite of what the logical answer would be, which is, hey, they push it over the summer. It's like, oh no, that's when the smart money is selling to the sheep, or I call them the sheeple. They're selling to the folks that don't know what they're doing because they didn't have access to the data. It's not that they're dumb traders. We're not dumb as traders. We just don't have the information. Now you do. Look what they do. They push this lower. If I take you to a chart of Disney, we're going to use Thinkorswim. I have it up on my screen. And I'm going to take you back. We're going to go 10 years. We're not going to actually go back 10 years. But here is where I'm going to show you something. We're just going to do a couple years because I want to respect everybody's time and I want to get you guys out of here before we go too much longer. This was 2016, the summer. If you just came in and you're saying, goodness gracious, why are we going back to 2016? Well, if this seasonality crap works, then it better work, right? We should see it repeating itself. So here we go. This is the summer of 16, just like our chart showed. The big money pours out. It has nothing to do with the fundamentals. Disney's fundamentals are, we're great. But then at the end of October, beginning of November, that's when the volume starts to spike. If you're thinking, well, okay, how do we know when the elephants are coming back to feed? How do we know when the cows are coming home? The big fish are starting to eat. Ready. The bottom of my screen is the volume bar. Now, this is Thinkorswim's basic charting pattern. When we see these volume spikes, that's the tell. Ready? Come on, Thinkorswim. Hang on. Thinkorswim, ever since they got rid of profit charts, they should be ashamed of themselves. All I did was move my mouse and the chart goes bonkers. Thanks, Thinkorswim. Here we go. So here's where we were. There it comes down. I'm going to move this slider and look at the stock explode. There was the earnings report. According to Thinkorswim, it's the little phone, the little light bulb. The stock explodes higher 3 years ago, almost to the day, and then it just goes nuts. This stock goes from around 95 in literally a straight line into the teens. You're talking about over a 20% stock move. These options were over 200 and up to 300% profitable. And in terms of what does that mean? That means if you know Disney moves higher for 6 months, you could buy a 6-month option. Keep it pretty simple. And you hold it until expiration day and then you dump it. Pretty simple. Here to here. And if I take you back to financial, when does the uptrend start? We're in it. Look how it starts perking up right over here on the right. You can start seeing it elevate. And here we go. And it's game on. Just like that. You go to a chart, you come over here and you say, okay, they're tanking Disney again. They're selling. I'm going to grab some popcorn. I'm going to wait for that earnings report just to be sure because, hey, maybe the report's going to be a stinker this time. Yeah, guess what? It wasn't. Pop goes the weasel. There goes the volume. And if you look really closely, here's the earnings report. There's the big volume. They were buying this stock. Look how the volume pulled back. This might seem really insignificant, but there's a tell. I love poker. I love playing poker. There's a lot of similarities to the stock market. Look how the volume began to go down. And then all of a sudden, 1 day, 2 days before the report, magically the volume surges. It's almost like, golly gee whiz, Batman. It's almost like they knew something was coming. They did. When you have these firms that are trading hundreds of millions or $1 billion, they can pay a bunch of programmers to go build this stuff and literally sit back and watch. We've built it for you now, the average trader. We built it for me. We now have the access to the data they have. Look at the surge in volume, and then magically, pun intended, there goes Disney. And Mickey and Minnie are off and running. Well, okay, so that was over here, and then it goes higher. Oh, by the way, Do you remember when Disney stock usually peaks? Wasn't it sort of right around May? No way. The seasonality period ends, and there goes Disney. Let's go back and look. There's the peak. There's the drop. There's the peak in May. There's the drop. You literally can overlay this on your chart and say, no way. Oh, yes way. Because the only way I can show you that data at financial with having such ebb and flows is if it actually happens. It's just data, guys. We're just showing it to you. All right, now, this is fun for me because it reminds me of our trip. So my wife and I were heading to Australia for vacation in 2017, the beginning of August. We're going to be gone for 2.5 weeks. Now, why does that even matter? Well, look at Disney. There was the peak. There it comes down, and the stock starts to go higher. So members webinar with once to twice a month. Just, I enjoy it. I like what I do. And my history is, by the way, I'm like come from the farm country of Pennsylvania. Never spent a day in college. You know, just didn't have any. I knew I was going to be in the stock market at some point. And then around 2000, I got interested and I got into it. And I was always, earnings matter and earnings are so important, and they're important if you're someone like a Buffett. Earnings aren't as important for everyone as they are Buffett, because the only way stocks go up and down is if the big money cares. So all I said to everybody was, listen, I have no secret. I don't have an engineering background. I may not be the sharpest tool in the shed. All I can tell you is, hey, we built this site and I can show you what the big money does typically. It's never going to work all the time, but it's going to be better than 50-50 flipping the coin. Look what happened. Here's the move. And I was going on vacation and I said to everybody, I think the webinar was July 30th. I said, listen, I know Disney's moving higher, but history says this is where they're luring the sheep to slaughter. The big money is about to reach into your pocket and take it. It's going to be thievery. I bet you these people are going to be turned out to be suckers. They're going to be solely disappointed, and this stock is going to drop. While I'm in Australia, I check my phone, I get back, and there goes Disney. It went right back down. I got emails and thank yous and love letters saying, oh my God, thank you for me not getting trapped in a bad trade. And I said, you're very welcome. It's just the data. All I did was share the stock's DNA with you, if you will. We knew this with a 10-foot pole, even if there was a big bucket of ice cream on the end of it. Do not touch, no touchy. And then down it goes. And I said, now wait till November, see those little turkeys push it higher again. No blanking way. Here's the earnings report. Look at the volume. They did it again, you little turkeys. They were buying in front of the report. There, the stock goes, oh, but this time it rolls over. This is what's really important about seasonality. It's never going to work 100% of the time possible. What happens if the stock doesn't live up to expectation? How do we protect ourselves as traders just to identify it and say, oh dear, it looked like things were going to go higher, but then it just went in the crapper. All right, we got the popcorn over here in October. In the bottom left of my screen, you can see the date, right? We got the popcorn. Pop goes the weasel on it. Here we go. We can get in, we ride it higher, and then when it closes below the red line, we get out. Now the red line is this. Everybody has their own favorite moving averages. And that's wonderful. Some of the folks today mentioned maybe the 21 or the 8-day or the 55, and there's nothing wrong with that. It's all wonderful. I personally have found that the 20-day EMA, the 20-day EMA, exponential moving average, works really, really well for trend trading. It's not perfect. There could be something better out there. That's all fine. I use the 20 and I love it. So I would suggest follow it, use it, and see if you like it too. And when it gets below, we just exit the trade. Now, why am I showing you Disney not working. I mean, should I just show you stuff that does work? You have to understand that it may not. And how do we get out of it? Follow it here. You get out here and you walk away. So Disney worked. It just didn't work as long. So let's go back to this past year. So Disney is 2 for 2, but one was amazing and one was only so good. Maybe they were 50% or 60% gains in options. That's still not bad. It just wasn't 200-300%. This past year, here was the earnings report. Now, what do we know what happened last year? It was actually the worst December on record. Remember, the news media was saying the world was going to end in December. Boy, don't they look really dumb now? Yeah, they look dumb just like they did in May when the market went down and then we go back up to new highs. Just ignore all those talking heads. We're up here and then we come crashing down. This time, Disney did not work at all. So we had one multiple triple-digit winner, one nice winner, and one time it didn't work. So Jake, to your question, so how do we know if we decide to get in and the market just tanks? Because I let out this webinar, probably 20 minutes ago, saying to you guys, if the S&P goes higher, 80% of the stocks go higher. Right. So if the stock market's going down, 8 out of 10 stocks are probably going to go in the toilet too. Here was the earnings report, and it went immediately down and we're stopped out, and then we're not caught in all this carnage. So Jake, the 20-day EMA in red, I think is a great litmus test. It works fantastic. So let's talk about this year. I need to zoom out just a little bit and just show you this. All right. Remember I told you that May was the peak in Disney? Right up here. This is April 29th. That's pretty close to May. The high of that stock, that bar, that day was 142 bucks. Remember? There's May. Literally marks the high. Maybe a little bit more, and then she rolls over. Are you kidding me? You tell me, did seasonality? I don't want to call it seasonality. I would love to call it the stock's own track record. The stock's own track record told you that it peaks in May, maybe sometimes a little bit later in June, and then we go actually net down. Look, it actually called the high. You can't make this up. It doesn't mean the stock's going to crash, but if you go back to Disney and you look at it, you're seeing it on the screen. It's telling you what they do. And then down we go. Now, when I was with you guys in May, at the end of May, I said, hey, let's see. Let's see if the top's going to be in. Pretty gosh darn close. And then I said, hey, get ready for the end of October, beginning in November. Now we see what happened. I'm going to zoom in. Here was grab the popcorn moment as we get to the earnings report. Notice the day before the earnings report, magically the stock pops and there's volume again. Oh my God. There it is again. The next day, there's the earnings pop. Now the stock's around 138 at the end of the day. Sideways, sideways, explosion, consolidation, and another pop. This is why I could so seriously say to you guys 6 months ago, just wait for Disney. You can get in before, as an example, but what if this is the 1 year it doesn't work? So wait till you see the whites of their eyes. Wait till you see the big money committing. How do we know if the big money's going to commit? Pop goes the weasel. There's the gear gap up. There's the big move, $5 move in 1 day. You had 1 day, 2 days after the event to get in before the Disney Plus news came out. Now, yet some folks will say that, well, you got lucky that Disney Plus news came out. Disney has a history of having announcements in November. 46 years worth of data. This was no accident that Disney Plus happened to be announced in November. It's what the stock does because I can prove it to you based on the data. This is when the big money responds positively to Disney. You could have been sitting back, waiting, and probably paid for your family, your neighbor's family, and their family all to go to Disney now. Because even if you waited, there's the 4 o'clock bell. If you waited even till after the earnings report came out, that is on 11/8. If you go inside Thinkorswim, for simple back testing, we can use ThinkBack. We go to November 8th, the day after earnings. You can see on my screen, the stock was up $5 whole bucks, right on the button. and we go out to March, and let's just say we buy a call. Just look at this. That $140 call is $6.25 now. 6.25, right? The next day was the weekend. Monday, after the report, the 140 is at 575. So on 11/11, let's go back and look. 11/11 right here, the stock finished down. That's that red candle. It finished down just a wee bit, right? Little bit. It's at 575. You're down 50 bucks a contract. The next day, the stock's up $1.84. Now your 6.25 is worth 670. And then the Disney Plus news. Now your 140 call is worth 1140. You're almost doubling your money in a couple days. With no help from me, all you did is go to financial, you use the screener, plus I host a members event once or twice a month. And by the way, I throw these out for free so everybody doesn't forget about them and say, God, you've got to watch this stock. Get the popcorn, wait. If it jumps up on earnings, it's game on. And then if I go to today's price, will it let me? What's today's price? That 140 call after today's little 10-cent move, it's now worth $14.65. I kid you not. This was a free trade idea 6 months ago, looking out in the future, just using a stock zone forecast. Every 625 bucks could be worth 1,400. Winner, winner, chicken dinner. I love that saying too. And everybody could have seen it. And you would have seen it if you were in the webinars. Pod was the same thing. This was another stock. If I zoom in, as we got into November, pod goes down, pod goes down. There's the earnings report. You wait for the pop up. It's 160. Now all of a sudden it's 180. Oh, a 3-day pullback. And now it's at 187. If you guys are just stock traders, these are incredible moves. Have you ever wondered why? I mean, for goodness sakes, just go back to Disney. Why do they tank the stock? Because the big money doesn't care. Big money doesn't care. Big money doesn't care. All of a sudden, the big money cares the moment the earnings report's out. And then it pops, and then it goes. To prove my point, does anybody trade Adobe? Anybody here follow Adobe or Netflix? I'm going to show you how an earnings report means absolutely nothing. How an earnings report's about to do nothing. So, hey, Elton, you do Adobe. Arthur does both. Nizar does Adobe. Sully does Netflix. Jerry, you do Netflix too? All right. This is not political. So we're going to be talking about the election. That has nothing to do with that, with politics, just about what the market did. Here is the S&P 500 back in 2016. Look how they said the world was going to end, right? Of course, they were wrong again. Stock market goes up, and it has one of its best fourth quarters, its best 45-day period in the history of the market going into the year end. We were down here at the S&P. Now the spiders is 208, so that means the S&P is around 2,080. Then it goes up to 2,280. That is a 10% move in 45 days in the broad market. Unheard of. Carl Icahn, I believe, was quoted that night saying he bought $1 billion in stock. Wow, does he look like a genius right now, right? So here's this huge move. So the president's elected, love him, hate him, doesn't matter. You see the stock market soaring higher in 2016. So you say, man, I'm going to go get me some Adobe. Adobe's a great company. You know, they do lots of good things. What does Adobe typically do? Well, you're about to be floored. So here's 2017. Oh, Thinkorswim. Does anybody else miss profit charts? God, I miss profit charts. Here's the right here. So here was the gap up. Now I already showed you the S&P 500, right? It went crazy higher. For one day, you were right. You're like, yes, I picked Adobe. Great company, make good products, been around a long time. And then it goes in the toilet. Huh. Then it goes in the toilet again. Now it's down at 100. You just lost 8% of your capital. Oh, but then there's that earnings report. Remember I told you I was from the farm country of Pennsylvania, had to learn from scratch, didn't know anything about the market. And I read this book and it said earnings, earnings, earnings. Well, earnings matter, but only if the big money cares. Here's the end of December. While the stock market is soaring, your stock goes back up to 108 and then down to 104, and then it's down around 103 right at the end of the year. You managed to lose 5% of your capital, and if you just would have been following the masses, you could have made 10%. How disgusted are you as a trader? How is it that you and I, by the way, I'm raising my hand here because I've done this. How do we always manage to pick the one stock that doesn't go higher? It's almost like we're cursed. How can this be? And then you get to the end of the year, and what do? You got to look at your spouse and say, oh, I'm a bad trader. Tell your trading buddies, it's your come to Jesus meeting or whatever it is, and say, oh, sorry, I lost money. I'm going to do better. And what do you do at the end of the year? You sell the loser and you move on. What if I told you that even though this earnings report took place in the middle of December, Adobe typically doesn't go up. It actually sells off at the end of December. And then you fast forward to January, and the stock becomes the mother of all rock stars. Here's earnings in 2016. After the president was elected, stock goes down. You flip the calendar to January, here comes the volume, and the stock goes bonkers. This stock goes from 105 in a straight line up to 135. A 30% stock gain. Can you imagine what options are worth at this stage? $30, 30%. And then it went up some more. Well, that was then. Well, if seasonality is believable, shouldn't this keep happening? Okay. Here is November in 2017. The stock actually did go higher. Then it pulls back around Thanksgiving, and then it starts going sideways. Here's the earnings report right here, and what happens? It goes right back down. Then the stock goes up again. You guys tell me what on earth happened for the middle of December into the end of the year, and then magically the world cares about Adobe, just like it did 2 years ago. The big money didn't care. The next time someone tells you earnings matter, you can look at them with facts on your side and say, oh yeah, earnings matter, ... but only if the big money cares. Because you and I aren't pushing these stocks higher if we're retail traders. Only the big money can. You flip the calendar and Adobe goes bonkers. What about this past year when the market was getting beaten? Here's the sell-off. Well, there's earnings again. The moment January comes, Adobe starts running. Now, in fairness, the whole market went higher, but you knew one of the best stocks out there that has a huge move. Adobe goes from under 230, 260, 270, 290, right on schedule. If I were to take you to financial and we type in Adobe, what do we see? Oh my goodness. Right here's January. Look how that stock starts going higher. Do you guys see that? Look how it gets shot out of a cannon. And all of a sudden, 84% of the time, and that's actually between now, 84% of the time between now and April, 21 weeks, goes up 24.97%. That's just the average. Some years are lower than that. Some years are higher than that. That's the average. And how could we also have known that maybe now is a good time to own Adobe? There's one thing I haven't shown you. You see this best period in the upper left part of my screen? If you click that best period, it's going to default to 13 weeks, which is 3 months, which is a really good metric for seasonality. Look at that green line. We can actually tell you when your stock has its biggest percent move throughout the entire year. At the bottom of that box, it says Adobe has risen by an average of 26.49% during this 13-week period, 78% of the time. If you went out here and said, show me the best 16-week period, look where it peaks. By the way, Adobe also peaks in May, just like Disney. That period, 84% of the time it goes higher by 27%. 1.5% a week, closing in on 2% a week. And you can keep doing this for every stock you got. Well, that was Adobe. Let's do Netflix. Now we know where Netflix is now. If you follow it, it's way higher, right? Here's the election. Your stock was up for 1 day. The very next day, it falls out of bed. You're like, no, come on. Remember the running joke we have as traders? I don't like to make assumptions, But I pretty much think this is all of us, especially if we're, by the way, this may not be all of us. If today's your first day trading, I will promise you a Philly cheesesteak. It will be you, guaranteed. You're going to buy a stock and it's just going to go down. The moment you buy it, you will buy the high tick. And now you're in the club because we all do it. We just don't know why. It just happens. So you buy Netflix and the next day it starts going down after the election. The stock's up there at 125 and now you're down at 113. You can't make this up. It's like someone has it out for us, right? And then it starts to rally into year end. Meanwhile, the S&P's up 10%. Even blind squirrels are finding nuts and look like amazing traders, but not us. And then we get to the end of the year. Well, we break even. So Adobe, we lost like 5% of our money, and Netflix, we broke even. How do we do this? Could you imagine you pick those two stocks out of 10? You know, I said 8 out of 10 stocks go higher with the market. Oh yeah, we picked the two that didn't. How bad are we, right? But that's because you didn't have access to financial. If you had known, Netflix typically does not go higher in November and December. It's dead weight. It's just what it does. Watch what happens the moment we get into January. The center of your screen is right here. That is January. All of a sudden, volume pops. Netflix goes from around 125. There's earnings to 138 and to 145. That's a $25 move on a $125 stock. Triple-digit options win. Double-digit stock growth, stock gain. Okay, well, let's go to the next year. Let's do 2017. Here is November. There is December. You can see we've lost what, maybe 5% of our capital that was invested in Netflix. What happens? You get to the end of the year. Oh man, bad trader. I'm going to dump it because I just don't understand why this stock doesn't go up. I mean, what's this holiday rally crap about? My stocks never go up. You picked the wrong one. Look what happens come January. Center of my screen. There's January. There's the volume. Netflix goes from under 200 to 220 before earnings. Look how they were buying it in front of that earnings report. You had a 10% stock gain in 3 weeks in January. Seriously. That's up almost triple digits. Now you have the earnings gap. It comes down and then it goes up to 330. You had a stock that went from under 200 to 330. It was over a 50% gain. And all you did was just sit back and watch and grab the popcorn. There's the window. We jump and there we go. So BB asked, what is the orange line on my chart? I didn't mention that yet. Let me just show you the exit system here so you see how ridiculously simple this is. We built financial, keeping in mind that you don't need me. You're not buying me. I'm irrelevant. We're just presenting the data to you. The orange line is the 50-day. This is the 50-day simple moving average. It's referred to as the institutional moving average. Not by me, it's by the investment community. So the 50-day SMA, when stocks are above it, the institutional line, they're viewed as bullish. When stocks are below it, they're viewed as not bullish. It's just the way it is. Did you guys already take notice to this? That magically the stock gets back above the 50-day within the seasonal window, and that's when the explosion or the fireworks begin? Yeah, it happened to Disney, it happened to Adobe, and it happened to Netflix. All I'm giving you. Not only are we in the seasonal window that January, Netflix becomes rock star. Look what it magically does. Leaps the 50-day, volume comes in, and then it's off to the races. You must be kidding. Now, once we're in the trade, what do? The red lines are trailing stop. Now, we're here on Black Friday. It is around a little after 4 p.m. Eastern. Some of you guys might be off. Some of you guys might be working. If you're in Australia, you're probably sleeping. Europe, it's getting time for bed. This is not a day trading type of thing. So you can all have your day jobs. You can all sleep during the day. All you do is when the US market is closed, you come to the computer and you say, oh, look, I got Netflix again. There it goes. And this is the question you ask yourself. Is my stock at the end of the day, when the market is closed, above or below the red line, the 20-day EMA? It's going to take you longer to power up your brokerage account than it will to figure this out. You're above, you're in, you're above, you're in, you're above, you're in, you're above, you're in. Oh dear, we're finally out. Now the whole trade is over. Walk away and you move on to the next one. And you just keep moving your capital very surgically into where the big money is going. And how do you find them? You go to financial. And it just keeps moving. No longer do I want to hold, let's say, Netflix for a whole year. Are you kidding me? I just want to go where the big money is. They're the ones moving the market. You can end up owning it. How many times have you looked at a stock and said, man, if I only knew to own it during that window of time, that would have been great. Why am I holding it when it doesn't go diddly for the other 6 months of the year? That's my point exactly. We don't hold Netflix typically in November and December. You look to jump on that party train come January. If I take you back to this past year, this is 2018, the whole market's getting killed. And they were putting out negative pieces on Netflix. And then magically, look, there goes the 50-day. There goes the volume. And it's off to the races. Did it go up as much as the other year? Nope. But I don't know about you, but how does the stock going from around 280, 290 up to 360 sound? And it's not that you guessed right. You knew when it does it. You knew when the stock typically does it. Well, how do you know that? Go to financial, type in your stock, look at the spike in January. Look at this move. It's huge. In fact, I'm going to get out my little pencil just to make sure you see it. Look at this. Look at January. Look at that chart. The stock goes bonkers and then it just keeps going. Right? All right. Now, if I do best period and you said, hey, financial, can you show me the best time of the year to own Netflix? Where do you think that little green line's going to pop up now? No blanking way. Yep, right there. Look at that. Over that 13-week window, Netflix rises 32% of the time, which is almost 3% a week, 76% of the time over that 13-week period by almost 3%. You can come up here and you can change that to 14 weeks. You can come up here and change to 13 weeks. You can change whatever period you want. And then you're going to be blown away when you start saying, oh my God, over a 16-week period, 8 out of 10 years it goes higher. And you may not know, 16 years Netflix has been publicly traded. That's a decent amount of history already. And there it goes. Does anybody here trade gold? This is my last example, and then I want to have you guys out of here. Does anybody here follow gold? So we've talked about stocks, well-known stocks like Disney. We've talked about Adobe. We've talked about Netflix. Any gold traders here? Nizar, you trade Nugget? Nizar, I can't tell you what to trade, but after I show you what GLD does, you might want to follow GLD. Jim, you do? Steve, Val, Sophie, you guys do? Ready? Here we go. We're going to type in GLD. This is the gold ETF, gold futures, corresponding ETF. I'm going to take you back to late 2013. What gold typically does over the summer and fall is it goes down. And then you get into the winter, January, it gets shot out of a cannon. Boom, 134. Way over a 10% move. You get 10% moves in a stock, that's triple digit options. Well, that was 2013, there's 2014, check. Somebody keep track of this. Down, up. So there's your up, we're 1 for 1. If I fast forward into the next year, oh, look what happened. September, October, November down. We only care about the up. There's the January up. Pop goes the weasel. Literally as the calendar turns, stock goes from under 115, 126, another 10% move, 2 for 2. November, December, you gotta be kidding me. January, 104, 120, 20% move practically, all within a month and a half. We're 3 for 3. Look at the carnage. We go from 125 to 107. We bottom right at the end of December. We go 110, 115, I'm sorry, 117.50, 120. Another 10% move. Was that 4 for 4? 5 for 5? Look at this. There's a drop. This one happens about a week early, and then it goes bonkers. We go from here all the way up to 128. What happens this past year? Guys, it's 7 for 7. If we go to GLD, oops, sorry, hang on. Search seasonality. SPY, and we do GLD. Oh, that's great. So the CBOE isn't giving us data. That's awesome. Well, what you would see is you would see GLD going up in its best period during that window. That is the 189 week window to watch GLD, just like Netflix. If I show you Netflix and GLD is there, but for some reason the CBOE apparently isn't giving us the data now, but you're going to see this spike and you're going to be blown away and say, wait, the whole year on gold, GLD goes up at that same time frame, just like Netflix, just like Adobe. And the answer is yes, yes, and more yes. So here's what I'm going to do. I'm going to cut this a little shorter. I usually go a little longer. I want to get you guys out of here. Hubert and Jeanette had me coming in because I have kept showing these seasonal trade ideas. I've given you stocks now. I've given you stocks for the new year. This is what I did in May when I was with you guys. And I showed you, at that time, we were doing Under Armour. We were doing Pod. We were doing Cerner. We were doing Expedia. And by the way, what's really critical here to watch is Pod. Because if I take you to the S&P 500, just really quickly here, do you guys know what the S&P did in May of this past year? Here was the peak in May, and they told us the world was going to end, right? We went from here to here. Oh my God, world's ending. We talked about Pod in webinars with you guys. Look at May. May marked the bottom for Pod, and it moved the exact opposite direction. So we do not need the market going higher for seasonality to work. Look what happened. This stock goes from under 100 up to 120, and you're just sitting back laughing like the stock's not below the red line. Oh my God. And then you get it. Like, how crazy easy is that? So we talked about Pod, Cerner, Expedia. Then we talked about the NASDAQ in early July. I actually unveiled this while I was doing webinars, and it was literally going up in front of us. Now we talked about Disney. These long calls within days were up 100%. So here's what I'm going to do. I'm going to give you guys one of the most amazing deals, the most amazing deal we've ever done. And you can thank Hubert and Jeanette for it. Here's some testimonials as well. Jan said she can't believe it. She's actually sharing this with her friends now because she's blown away that this stuff keeps working. Bruce says, I've had 9 in a row that have won. 3 others are still open. He's tickled pink. He's like, you just can't make this up. Now, I will say this. Not everyone's ever going to work. It can't. Nothing can ever be 100%. But one of my most favorite testimonials is Monica. She says this. She couples it with her own technical analysis. She says she's trading less, staying in trades longer when others are panicking. My most favorite is the second paragraph. My trading accuracy has skyrocketed, and I'm no longer wondering why the stock I picked didn't move. This is exactly the tool I've been searching for. You no longer have to wonder which ones are likely to move. I can show you them with 2 clicks of a mouse, and you're no longer wasting all this time on the weekend. So here's what we're going to do. Best price ever. The only catch is we sold out when we did the last webinar. I'm bringing back 50 packages. Jeanette, I heard her say earlier that they're going to make these available till midnight. If we sell out 50 before midnight, the page will just go to sold out. It actually won't even let you take your order. So the price on our website, the regular price is $17.88. It's not $9.97. It's not $7.97 a year. It's not even $4.97. This is the mother of all holiday specials. It's going to go away. This is it. You'll never see a lower price. There's never been a lower price. It's going to be $3.97 for the whole year. $3.97 the whole year. Go to financial.com/thirsty. So it's pretty simple. Financial.com, which is our name, /thirsty. So the team at TradeThirsty and Reagan are going to put this in a link for you that you guys can click on it. I would suggest, I know you guys have been here all day. If you were hoping to do it later, once the 50th is hit, it's going to go away. We don't want to keep selling it for $3.97 a year because this was our original charter membership price. There's never been one lower. If you're like, he's just saying that. No, I'm not. It truly is the lowest it's ever been. You're going to get platinum access for life at this price. That means, guess what, next year? You're locked in at $397. This is less than $34 a month. So if you want to talk about cheap, our goal with Financial is to basically acquire as many people as we can as customers, because then y'all go tell your friends and say, you're not going to believe this. This crap actually works. You can see when the big money comes in because the stocks are telling you. You literally have the GPS on your stock. Think about this. If you go to Financial and you type in the stock, let's say, like, oh my God, we didn't even do this example. Type in Xilinx. You can actually see how these stocks trade. Look at this surge in January. Look how Xilinx goes bonkers, right? And then you go to a chart. Look at that line. It goes from down here all the way up there, all in the course of 3 months. Notice how it then goes flat for 3 months. Are you prepared for this? You'll take your stock and go look at what it's done. You take Xilinx, and what do you see? This is just last January. There goes Xilinx. The 3-month period is over. It gaps down, goes up, it breaks even. Could you imagine knowing exactly which quarter of the year to keep an eye on your stock, and then you get out before the next earnings report because that's when the big money is leaving too? It almost doesn't get any easier than that. And you knew about it because you could have gone to Financial and you could have seen it. And then you can do best period and say, oh my God, there's the green line too. You've got to be kidding me. Here's another bonus trade idea for the new year. So we're super excited. I know my voice changes a lot during these presentations because I do get that excited. Sorry if I blew out your speakers sometimes. But we looked at an example with Adobe where earnings doesn't matter. How can earnings not matter for 2 weeks when we're told that's all that matters? And that's because the big money didn't care. Big money cares in January. That's when Adobe typically runs, year after year after year. You are going to get 3 bonuses. Jeanette asked me also if I could bring you guys anything extra. Next year, the first bonus is going to be split out, and it's a copy of my own hot stock list. Next year, it's going to be what we call an add-on sale, where people are going to have to pay separate for it. That will never be your problem. Again, thank TradeThirsty for this one. You'll be grandfathered in at $397. What I'm going to do is I'm going to wait till midnight tonight after everybody gets in, and then tomorrow I will email everyone who joins today my own hot stock list so I can do it all at one time. But it's not even part of the normal package. You'll also get invited to next week's members only event. We're going to be doing one at the end of the week that's totally free for you guys once you join us. And then I'll also give you a copy of my entry and exit system. This is not complicated. I've actually given it to you today, but I have it in print and I also have it in video. You'll get all of that, all 3 bonuses as part of your deal today. And please keep in mind that you never pay more than this. Some of you guys came in earlier and you paid, the lowest price was $497. If you did, email me and I'll hook you up with a deal for this one. But this is even cheaper than the last event I did with Hubert and Jeanette at $497. This is the mother of all holiday specials. So go ahead and ask your questions. The link is financial.com/thirsty. Just type it in or click on the link that Reagan is giving you. Oh, perfect. I see she's doing it. She's going to keep track. So she says right now, 6 of you guys already jumped. We're at 44. She's going to keep that counter going. The markets were closed today. That might be the GLD thing. The programmers know that they're not supposed to be updating the site. I don't know if they're working on the site now or not. Maybe they got their days mixed up. But Bill, does it work on hourly or intraday? The answer is no. Seasonality does not work on hourly or intraday. This is big money taking their positions home overnight. Big difference in day trading. So no, this would not be for day trading. It is not for hourly or minute by minute. This is, which brings up another question I get asked often. How long do the trade ideas typically work? And I would say this. If the stocks start moving, they're going to last a couple weeks, maybe even a few months. And the funny thing is, somebody said to me, I'll never forget this, and the example was Disney, because I was doing this in a presentation, and the gentleman was following it. And I did this presentation, and he said, wait, so you're telling me that if I got in and followed you guys, and not, by the way, I got to watch my English here, my language. You're not following me. You're just following what the stock does. I'm irrelevant. The stock comes up, and you say, okay, I'm going to follow the stock from 95 all the way up to 115. Ron, that was 5 months. I don't ever hold stocks for 5 months. That's ridiculous. And I thought there was more coming. And I said, what do you have a problem with? He goes, I can't hold a stock 5 months. Are you nuts? I said, so you're telling me you got a problem with the stock going from 95 to 115 exactly with matching what the historical data said? I said, dude, do you not like money? I'm like, what is your problem? And we were having a nice little conversation. It was funny. And he goes, oh, I guess if I think about it that way, it's not a big deal. I said, look what Disney did. Go to financial, type in Disney. And then you're going to say, oh my God, that's what it does. You literally can see when they come in, you can see when they leave, and now you have that 20-day exponential moving average in your pocket as an end of day stop. How cool is that? Hey, Nazar, can we check out Apple and some others? We can. I can do that in a couple minutes. John, you're already a current member. You can email me if you want, John. Just reply back to any email I sent you. That's totally fine, John, and I can help you there. Godfrey, do you provide alerts? Ooh, good question. So here's what we're going to do. If we go inside financial, there is watch list, and you can type in and build your own watch lists. Okay? I have my metals watch list, my January, my February, my mid-November, mid-December watch lists. You can make up as almost limitless a number of watch lists. If I go to metals and we take a look at GLD, here's what you can do. Well, I've told you that GLD has this amazing rise the last week of December, and then it usually goes into February. 7 for 7 straight years. We'll see if this year's number 8. We know what to watch for. You wait till the end of December, the stock jumps above the 50-day moving average, the institutional moving average, and then it's game on. You just sit back, grab the popcorn, and wait. And by the way, we're going to have member webinars at the end of December because there are 2 fantastic times of the whole year to do this. It's the end of October, and it's the beginning of January. We're still in one now, and the big one is coming up in January. You do not want to miss it. So many stocks starts going higher. And while the S&P goes up a few percent, these puppies go up 10, 20 plus percent. So anyway, once you put a stock in your watch list, all you're going to do is click that little calendar. Now, I already have a watch list reminder set for 12/18. I can change that date and make it 12/24 or something, or whatever date I want to do it, 12/19. Then I hit save. What we will now do is we will alert you when your stock enters that window. I want to be made aware so I don't forget. So you can do that with every stock. It's fantastic. Now here's the thing, for $397 a year, I'm not trading anybody's portfolio. I'm not a licensed financial advisor. I don't do that. I don't know your risk tolerance, and it wouldn't be fair for me to do so. I can give you all the information. I can tell you exactly when to watch, and then it's on you. So this is not, for $397, me telling you when to buy gold and me telling you when to sell gold. That's financial advice, and I can't do that. I don't want to do it either because I don't know you. Therefore, I will show you my entry and exit system, and then you tell me if it works. And I'll tell you what the members say. Just like Monica's testimonial, less time watching the market, more freedom to do what she wants, and it's a whole lot of less stress. That's how easy it is. It's absolutely that easy to follow along. I didn't want to make it complicated. I almost gave up following the stock market because I would buy these books from folks. They seem to be like, oh, bestseller this, bestseller that. And as I would go through it, it sounded incredibly hard. I'm like, I know I'm from the farm country of Pennsylvania, blah, blah. I like to use that as an excuse just to say that I'm so far removed from finance at that stage. I'm like, but I'm not dumb. Why am I not getting this? Because they're using fancy lingo and I'm like, oh my God, they make it so much harder than it needs to be. what I hope I've done a good job with today is showing you that you're not relying on me at all. You have access to the data and you're on autopilot. You are good to go. Pretty simple, right? So please ask your questions and I'll let you know. Hey there, Daniel. I joined. What are those trending stock ticker symbols? Oh, on the front page, Daniel, those are just ticker symbols that folks are typing in. It's sort of like a little social media component, just saying, hey, you might want to be curious because it seems for whatever reason, a lot of folks are typing those tickers in. It's just like a side note. Lawrence, oh, you remember too. Awesome. I thought I remembered your name, Lawrence. Lawrence, if you have a question on when your membership ends, just send me an email. Just reply back to anything, Lawrence, and we'll get back to you. And Jim, you remember? Wow, that's awesome. Thank you so much. Hey there, Kevin, you're in? Okay, great. So here's the thing. Because I'm sharing my full screen, I can't actually say welcome to everybody who joins, which is what I typically like to do. So Reagan's going to say hello. I see she's saying John, W, Kevin M, Scott R, Avanish, and William. You guys have joined. So I'm going to say, hey, welcome. Oh, I forgot to say one thing. Holy moly. Oops. Hang on a second. I gotta do this. Did you guys see this little box I'm drawing? I forgot to mention this. The other thing that Jeanette and Hubert wanted, they just told me they want the best, the best, the best, the best. And you know how they negotiate. So I said, well, this was going away, but I can keep it up because it makes for a great Black Friday special. And I had it last week, and I'm going to keep it up for today. And then it's going bye-bye. You can get a second year at $297. So every year that you guys are with us, you'll always be grandfathered in at $397, always, for Platinum Access. We already put it up to $497. Folks are paying more than you already just because it's the Black Friday super duper deal. But you can actually pick up a second year for $297. It's going to be a pop-up window, okay? So in order to get it, after you go to the order page and you hit buy now or order now, there'll then be a pop-up window and then you get $297. It's just a one-click yes or no. If you want it, we'll charge you the $297 as well. And if not, it's okay. You don't have to take it. But here's the catch on that. This $297, I am not going to be offering it next year. So if you love what you've seen, and I hope I did a good job, grab it now. You'll always get your $397, but the $297 is the super duper crazy, you must be kidding me deal, if you want it. And I understand if you don't because you just want to try us out. But if I did a good job and I got you interested, gosh, I would take that second year. I mean, at $397 a year down to $33 a month, frankly, you can't even go to Olive Garden for that anymore. Unless I guess you do the lunch thing, but I hate soup. I'm more of a meat and potatoes guy, so I don't do that. David asks, why is it so cheap? I get a lot of pressure from others to raise the price and make it more. However, if you're trading a $5,000 portfolio, if you're trading a $5,000 portfolio, you know, that's what I actually first started with 2,000, and then it was 5,000. $397 out of a $5,000 portfolio is a lot of money. If you got $500,000 in the bank, it's nothing. You'd pay $397, you'd pay $997. Wouldn't really matter. But $397 pretty much speaks to almost everybody, I would think, or it does speak to everyone. I just want as many customers as we can get because you guys are spreading the love for us. The amount of referrals we get are insane. Scott says, yes, but I'm guaranteed a meal at Olive Garden. You are for that day, that's right. That's funny. Okay, here's the thing. If you go to financial.com/thirsty, that tells me that you came through Jeanette and Hubert and the gang at TradeThirsty. If you've just bought and now you're saying, crap, you said no to the second year, but you want the second year, you have to email us and then we can push it through for you. There's no page I can send you to, okay? You do have to ask for it. And once you say, yes, I want the 297, then Reagan, Keith, or Misty will actually go into your account and click Bing add, and you'll be charged for it. You'll always have the 397. It's the 297 that is the one-off crazy Black Friday deal that I don't want to keep doing anymore. It's too cheap. PA Humor. Oh, Scott, maybe you were asking. I am right near the Allentown Airport. So if you look at a map of Pennsylvania, I'm all the way on the right side. It puts me about an hour north of Philly and about an hour and a half west of New York City. Okie dokie. What else do we got? Hey there, NW. Oh, I did. It was easy peasy. Hey, that's my kind of language. I thought I said something earlier. You enjoyed the trivia that Jeanette was doing? Awesome. Yeah, Jeanette's great with that. She's awesome. It was funny. I just saw Jeanette and Hubert, and most of these speakers, by the way, I've met all of them today. I think they're all great. So most of us had dinner in Vegas about 3 weeks ago now, it's the beginning of the month. It's always a good group. Oh, that was for Jeanette. Awesome. Cool. All right, another question. Will this work on ETFs? The answer is yes. You can type in XLE for energy. You can type in GLD. Seriously, you can. You can type in silver. You can also type in currencies, but there must be an ETF corresponding to the currency. So if you're going to do, the Swiss franc, you got to use FXF. If you're using the euro, FXE. The pound is FXB. The Aussie dollar, FXA. FXC for Canada, etc. Yes, you can. USO can be used for oil, although it's not completely oil. It's a decent tracking mechanism for oil. All right, Reagan is now telling me 31.24. We are past the halfway point. So, gang, incredible response. Holy moly. Thank you guys for being here. I mean, this is amazing. We're past the halfway point, which usually means there's a bunch of you guys that are still in the cart thinking about it or in the process of doing it. If you are here and you're thinking about it, would you do me the favor and ask me the question, what else you need to know before I can get you to jump? Maybe it's what you want to hear. Maybe it's not. I'm just going to tell it like it is. When Jeanette had me back in October, I'm going to scroll up because they have the emails. And where is it? Here. These were the stocks when I was with you guys in May. We talked about every darn tootin' one of these. And not only did we hit 4 out of the park, and by the way, this isn't me picking stocks. This is just the stocks talking to you on our website. 4 home runs, right? And then we had ResMed, Gilead, MasterCard, and Intuit. We got Expedia, we got Under Armour. This is stuff you probably are wearing today, maybe. Well, you're not wearing Expedia, but Under Armour you might be. Then there was the NASDAQ, the exchange, right? You must be kidding me. That was triple digits. Then it was the Disney. I gave you it back then. And then we sit here, we wait, and then pop goes the weasel, as I like to say. It's just incredible. And now I've sent you guys home with a whole bunch of other goodies for the new year, just because I want to give you. I know if I keep saying it, you're going to join eventually. I'm going to get you, because you're going to say, man, this dude comes on, beside his corny jokes, he keeps showing us stuff that wins. I would love to tell you that it's because I'm that good. I'm not that good. It's just what the stocks do. They're going to sit on you. Think about them sitting on your shoulder telling you, hey, look at me. This is what I do based on proof. So I'm not predicting anything, just telling you what they do. And it builds tremendous confidence, which is why Monica's testimonial was so spot on. It saves her time and gives her more confidence. Tim, excellent presentation. Thank you so much. Let me just read some of these other questions. All right, well, we got more here. Dean, great to have you. Oh, you're joining for 2 more years? That's awesome, Dean. Thanks, great. I might buy, you're the last presenter and I always spent my money. Hey, that's okay, I get it. There was a lot of great presentations today. Jeanette and Hubert do a fantastic job at assembling what I think is great talent, and there's a lot to see. So think about it. Write this link down, and after you, everybody else, if I made a lasting impression, go for it. But if we do sell out tonight, we're done. I'm not going to keep doing this 397, especially with that second year add-on. Does that make sense? So please write it down, keep it, and I wouldn't wait too long. So Reagan is now telling me we're down to 11 spots. Let me hit some more questions. Oh, you know what I didn't do? Holy mackerel, hang on. Dean said so much at a reasonable price. I didn't even tell you what else you get at Financial. We only did seasonality today. Let me quick highlight this because we're probably going to be done here in about 5 minutes. So we did seasonality search. What that means is take your stock, like Netflix or something, and type it in, and we'll show you what the stock does historically, all based on the stock's own track record. Then you have seasonality screener. That is where you can screen for stocks. We did that too, right? That's what I let out with and said, hey, these are the top stocks for year end. Now I can show you how to cull the herd even further in the members webinar, which I record and I'll send to you. We do those about once to twice a month. Because December is so important, frankly, to kick off the year, we're going to be doing a couple events between now and year end. You cannot afford not to know who to watch. It's not fair to say like shooting fish in a barrel, but the members will tell you it might be pretty dang close. But here's the thing. I don't just want to shoot any fish in the barrel. I want to go in there and I want to get the ones that move the most. Sure, they might go up 10%. I want the ones that are going up 20. That's where I want to focus on. I want to not even though they quote that whole list might move, I want the biggest bang for the buck. I want money to have the best chance to make the biggest return. That might sound greedy, but when we're using the stock zone data as our weapon, wouldn't you want to do the same thing? And that's what we're going to focus on. So member webinars are a complete bonus. Maybe one day I'll stop doing them. I said that over 2 years ago, and here I still am because the members love them. There's no set schedule. They usually take place during the middle of the week, during the middle of the day, because that's when I feel like doing them. But I record them and I send them to you. So you can watch them. You can email me with any of your questions. And if it's a trading question, I actually respond. If it's an account question, then the team responds. So that link is financial.com/thirsty. Reagan's putting it in. Now she's telling me we're down to single digits. All right, let's go. Stock score. You can, I didn't show you this either. All right, let's quick do this. Oops, hang on. All right, let's do this. If we type in, let's say, somebody wanted a stock. I think it was what, Apple? Let's just do Apple. Everybody likes it. I like Apple. Hang on, let me just do this though. You go down there, you come up here. That way you can see the link. If we type in Apple, we go search, and we do stock score. We can look out over the course of the past 52 weeks, and I have a histogram where green is a buy rating, red is a sell rating. Green buy, red sell. Red you're long, green you're exiting the position, not shorting. Sometimes you'll get 10 signals a year, sometimes 3. It all depends on the stock. But here's where it gets crazy. If you scroll down, and if you held Apple from the day it went the day it became publicly traded, could you imagine telling your friends that you're up 43,000%? You'd be the king of kings, right? Queen of queens. And then if you have used our stock score, it's a 1.3 million % return. This is an aberration. It is not the norm, but our stock score on Apple is absolutely stunning. This is not options, gang. This is purely stock. How about if you do Disney? Some stocks it will not work well on, and some it will work incredibly well on. And we're okay with that. But now you know. So do Disney, scroll down, and check this out. If you held Disney from the day it was publicly traded, 12,000%. I mean, that's amazing. High five. And then you use our algorithm, only holding it when it's on a buy, it's over 4 times better. So it's not the 1 million % Apple has, but it's still 4 times better. You also get access to that. There's an income screener. By the way, there's a covered call screener at Financial. There are companies out there selling covered call screeners that are charging 50, 100, 120 bucks a month for just a covered call screener. You're getting that for the price of less than 34 bucks a month. I kid you not. That's how crazy good this deal is. You also get value investor stocks. From the time at the hedge fund, as well as our own learnings, we put together a very specific group of metrics to look for stocks that are undervalued fundamentally. So we call it Buffett style fundamentals. You'll get access to that. We do have newsletters. We will send you trade ideas. It just says, hey, these look interesting. Check them out. It's up to you. And then, of course, we did talk about watch lists. And there's so much more. There's fundamental data at Financial you guys can go dig into. You get all that for $397. Reagan is sending me a text. I must be ignoring her. What's she telling me? 6 spots left. All right, guys, I think I'm going to stop here because I would imagine there's a couple of you in there right now probably going to buy. And I know Jeanette said that she's going to send the replay out. If you're watching this on replay or you're here now, I'm going to guess there's going to be nothing left by midnight, maybe even nothing for the replay. Once number 50 goes, we're done. So I hope I made a lasting impression. I hope I kept things simple. Showed you guys the power of the seasonality. And I would just urge you guys, hit screen, hit seasonality, and start looking out over the next couple weeks. Start looking at what moves. Again, there is no human secret sauce at what I'm showing you. What you're looking at your screen, this is what these little turkeys do. That's the proof. So if you said, hey, what's the back tested data like? You're looking at it. This is what the move is. 35%, 31%, 30%. And we're telling you that the amount of times it's been right. Financial can also be the ultimate this versus that tiebreaker on trade ideas. I don't really have the time to, maybe I could, but I love pizza. And if you look at my round belly, you would know that I like pizza. Now, my favorite pizza here is in town. However, Domino's and Papa John's do 2 different things when the Super Bowl, the big game, comes around. If I take you back 4 years on Domino's, what you're going to see is it's amazing. Here's the Super Bowl. I'm going to do this really fast. There goes Domino's. There goes Domino's. Super Bowl. There goes Domino's. Super Bowl. There goes Domino's. And then I go and do Papa John's. And by the way, Domino's has a historical track record of never losing. It's never lost. Doesn't mean it's going to work this year, but it's never lost. Here's Papa John's. If I take you back a couple years, it's like, oh, Papa John's sort of went up, but then it went nowhere. Papa John's over here. It went down, but then it went up. Okay, so we're sort of one out of 2, right? How about here? Nope, 1 out of 3. How about over here? There was a pop, but then by the Super Bowl, it went back down. Is that sort of 1 out of 4 maybe? Best 50-50? How about over here? Nope. Even if you try to be nice to Papa John's, it's maybe 2 out of 5, 2 out of 4. And Domino's was 4 for 4, 5 for 5. So it's no shock if you went to search seasonality at Financial, you type in DPZ, and you do the best period, over a 13-week period, it's never lost. Over that 13-week period, the stock has gone up by 20% on average. That's actually almost 1.5% a week. Wouldn't that be cool to know? The stock you're thinking about trading never lost. And you know darn well that Domino's and Papa John's are going to be plastered all over the NFL playoffs and the big game, but only one goes higher with a track record of perfection historically. And now you know what it is too. I got to stop giving away these trade ideas, right? It's getting a little crazy. But this is the power of what you're going to get access to. And the beauty of it is it's so empowering. It's confidence building. You're looking at data. All right, last couple questions, we're going to stop. Hey, Bill, yeah, let me help you out with that, Bill. Bill, I'm going to need you to send me an email and we can help you. And I got your name, Bill, so we know you came from TradeThirsty, so no worries there. All right. Hey, gang, Reagan's saying we're down to 3, so I will stop there. There's so much more I could show you. If you're wondering, this is the best price we've ever done. It's $397 for the whole year. When number 50 goes, which Reagan's telling me we're basically there, then we're going to stop and the page will go sold out. If anyone bought twice because they were excited or they double clicked, we automatically void that. We go in and we take a look at it. So you're not ever going to be double charged. That may free up an extra spot for somebody. I don't know until I get in there and take a peek. Members, welcome. Midweek, probably around Wednesday, I'm going to send you an email, and we're probably going to have the event Thursday or Friday is what I'm thinking. I'm going to record it, so if you can't be there live, I'll then shoot you an email. You'll have a copy of it. We need to start getting ready for January. We are entering one of the best times, the best time of the whole year. Holiday season's fun, but oh baby, is January even better, because that's when the market starts to get the wind behind its back with the big money coming in. Scott, when do the bonus offers come in? So here's what's going to happen. The hot stock list, Scott and everybody else, I'm going to email you tomorrow, because there's going to be folks that are going to come in tonight. I'm going to wait and do one mass mailing tomorrow. So I'm going to be around all weekend. I'm not going anywhere. The members only session, you're going to get an invite from me on Wednesday of next week. And the entry and exit system will also come tomorrow. If you want it sent immediately, email me. I'll attach it and I'll email it to you tonight. But because they weren't part of the original deal, I got to do a mass emailing. So this is where Jeanette said, Ron, give me all your good stuff. Gimme, gimme, gimme. And then she went gobble, gobble, gobble. But so that's why it's separate. And remember, when you receive an email from Jeanette, you always want to reply back with, roll tigers. She loves that kind of stuff. Any other questions?
You want me to cut you off? Is that what you want me to do?
I was wondering if you were listening.
I am over here listening. I'm about to come up there and beat you and your pizza problem. Okay, go ahead. I had to. Look, I had to. I just had to. So
I know.
You can finish up now. And I'm gonna let you keep playing your little roll tiger game, and we'll see what you're gonna say come Monday. How about that?
Mm-hmm. Well, I'm a Nittany Lion fan, so we already got our butt kicks twice this year, so we're out of the national championship. But yeah.
Sorry about that.
So yeah, it's okay. So Jeanette, I'm just going to wrap up here. I just want to say, thanks to you and Hubert and the whole gang at TradeThirsty for having me in again. And your group is awesome. We got a ton of new members here. Reagan's saying we're down to a couple spots. So I'm going to go hop into our customer care inbox and help her tonight, but she's heading out for a long weekend. So I'll be responding to you guys this evening. And if they have any questions for you, Jeanette, just let me know and I'll be happy to help where I can. But thank you for coming in and thanks to everybody for being here.